Financial Survival Network, helping you survive and thrive in the new economy. Go to carrylutz.com and sign up for 30 free micro trainings on financial survival.
Great news, we've got a sponsor. This show is now brought to you by Miles Franklin. And when it comes to protecting your wealth, you know there's nothing better than gold and silver. That's what I'm buying. I hope you're doing the same. And once you make the decision to buy gold and silver, there's no better place than Miles Franklin. Look, they've been in business 22 years. And the reason I'm a customer is because when you buy, they ship. Go to milesfranklin.com or call them at 800-822-8080 to get a free quote. 1490 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network. So some people think that gold and silver are bubbles and they've been popped. But my next guest believes that the attempts to stem the rising tide of gold and silver will be short-lived, and perhaps they're over now. I've got Jeb Handwerger. He is from goldstocktrades.com, frequent guest on the show. He's back with us now. Jeb, how are you?
Good. Thanks for having me back, Kerry.
Always great to have you on. Always a pleasure because you're a no-hype, straight-to-the-point kind of guy. So what's the deal here? Gold and silver bubble pop, or are we looking at more manipulation and more of the same?
Yeah, well, it's interesting, Kerry. Some of my readers have seen this occurring in the second half of 2011, and now we have it again in 2012. Whenever the commodities and precious metals are about to be on the verge of a breakout, and for several weeks, we've been telling our readers that the $1,800 mark on gold and the $35 mark on silver and the $4 mark on copper was critical breakouts that if it broke through that area, we could see a very powerful move in precious metals and commodities. And we've been watching this for a few weeks, and silver broke out, and it was beginning to really outperform. And then all of a sudden, we get this shakeout that somehow manages to occur at these times when precious metals are just about to take off. And we don't believe it's coincidence.
Mm-hmm. And who might be behind such a nefarious plot?
Well, I think that whenever you see gold and silver start rising, it's a indicator that of all this printing that we're seeing in the United States, in the ECB, the Chinese have started their own stimulative moves. The Japanese have intervened in the foreign exchange markets. The Swiss bank has been involved with the foreign exchange market. So when gold and silver, precious metals and commodities are the indicator that of all this stimulative liquidity that's coming into the market. So the central bankers do not want to see, although we're seeing equity prices reaching new highs, they want to keep up the equity prices, but they don't want to see gold, silver, copper prices soaring. They want to keep the equity market and the risk on rally, but at the same time try to prevent the gold and silver and the dollar from declining to a new level. So there's a motive here, which is to keep gold and silver down, but at the same time try to prop up the equity markets.
Yeah, it sounds like a losing battle to me. And yesterday we had, I guess it was an announcement from the Fed that they're thinking about sterilizing or effectively removing the money that they use to make bond purchases from the banks, allowing them not to loan it out, and that somehow this is going to prevent inflation from occurring. What was your take on that announcement?
Well, it's interesting, Kerry. A lot of my readers have been, disappointed that we haven't had a QE3, an officially announced QE3. And that's why we had this sort of reaction in precious metals and industrial metals, that they've been waiting for Bernanke to come out and say, okay, we're having QE3. But what we're not realizing is that we've had QE3. We're having global effort to inject this economy with billions and trillions of dollars. Yeah, the ECB injected more than $1 trillion into over 800 banks throughout Europe.
Yeah, I saw that. Amazing, huh?
Yeah, it's and do not think that the Federal Reserve and the IMF is not behind this. So call it whatever you want to call it, QE3, monetary stimulus, LTRO. They come up with whatever moniker they want to come on, liquidity injection, long-term refinancing option, Operation Twist, QE2, TARP. All it means is inflation down the road. And they're trying whatever means they can to prevent a breakout runaway move in gold and silver. And that means that what's going on with the charts is it's just delaying. What went on last week, all it is delaying the inevitable. Gold and silver will break out again, and it will soar into new highs. It just might not be as quick as some of the gold and silver investors want it to come, but it's going to be down the road.
Yeah, well, I think overall, and I'm talking the physical investors here, most people holding gold and silver are very patient, and they're not getting suckered by these very transparent moves. I mean, 100 million ounces, 300 million ounces of silver. I mean, I've heard different numbers dumped into the futures markets in a moment's time. It's so transparent that even if you weren't a conspiracy nut like I sometimes am, you would know that, hey, these guys, something way beyond just simple market forces is driving the markets here, right?
Right, and that's what we saw, that 80-point decline that one day. It seemed like it just didn't seem normal trading. And this is why you have to be very careful in the paper in the future markets and make sure that you have your physical gold and silver, but also, to make sure that you have a position in what I believe is wealth in the earth assets in mining friendly jurisdictions and with very high quality junior miners that are exploring and that are developing and building assets. So that's why I'm trying to focus on the wealth in the earth, because there's so much funny business going on in the paper market and in the ETFs that investors really need to be careful and of all this manipulation and these huge banks and institutions that you can competing against.
Right. Yeah, I mean, it's so out of hand now. So, yeah, you have to take a longer view. You can't be short term here, or you will get whipsawed and you will get knocked out of this market, because they know what your stop is. They know whether you're a strong or a weak holder, and they will just blow you away.
Right.
And same with the stocks. You got to buy them extremely low at extremely favorable prices, so that when they try to shake you out, when they try to break your confidence, because that's what they're trying to do. They're trying to make you doubt your view of the market, the economy, and the world. When they attempt to do that, those stocks won't get hit as badly because the margin of safety is there and you've bought them extremely cheap, right?
Right. Well, I've actually written about this topic a lot, about trying to buy gold and silver on pullbacks, because there will be volatility in gold and silver, and we're witnessing this sort of pullback and this incredible volatility. It's not a time for people to run to get scared. We've been following this market for many years, the gold and silver market, and the pullbacks have been excellent buying opportunities, and the long-term trends are continuing up. They have been for the past 11 years. Let's just take a look at gold and silver recently. Since the beginning of 2012, gold rallied from 1525 to 1800 with hardly any sort of interruption. So there will be pullbacks. Silver rallied from below 27.5 to close to 37.5. That's almost a 30% gain in a couple of months. So it's entitled to have a pullback to the 50-day moving average. So, things are not going to go up into a straight line. Gold and silver investors have to be prepared for pullbacks. It's not a time to get scared and to be shaken out. It's a time to stay strong.
Absolutely. And these moves, look, this morning, gold was back over 1,700. Looks like there's intervention in the market again, but it's still up over $10. At this point, are they going to pour all that paper in there to try to knock it down? Probably not at this point. They're going to let it go up again, and they're going to be painting the tape, painting the chart, trying to make people believe who follow technical indicators that that this is it, it's over. But in the final analysis, not going to work, is it?
We don't see that. We don't see that. They're in a bind. The economists are in a bind, and the very stimulus that they've created is now what they're saying is causing a problem and inflation. We don't see it. It's the old Orwellian game of double speak and double think. Say one thing and do the other. So just stick to the long-term trend in precious metals. We'll call it whatever you want. We're seeing a debasement of the currency, and it's going to benefit precious metals and wealth in the earth assets.
Absolutely. We got you there. So, Jeb, people, they want to follow your advice. They want to find out more about you. Where do they go?
Sign up for my free newsletter at goldstocktrades.com.
Okay, we got it. goldstocktrades.com. We'll talk to you again soon, hopefully after gold breaks out of 1,800 and silver breaks out of 35. It's going to be sooner rather than later. My personal belief, it will happen faster than anybody believes possible and anybody thought possible. But we'll see. All right. Hey, you be well.
Thanks, Kerry, for having me again.
Always a pleasure.